Before we start, be sure to check out the description to find out how you can win a Nano Ledger S. The bear market is imminent, and investors, especially Cardano investors, are in dire need of solutions and strategies to apply to limit the devastating effects of the market condition. The MicroStrategy CEO and Bitcoin billionaire Michael Saylor has recently taken to Twitter to educate crypto investors on what to do to survive the bear market. Without further ado, let's get into the video and find out what he has to say. And as always, be sure to watch the video until the end. Many investors consider the recent downturn of events as a black swan and historic in size. While emphasizing the unwinding of UST, Charles Hoskinson, the founder of Cardano, stated that a collapse of a stablecoin or a project exit scam does not indicate the end of the entire industry. He added that the entire point of the crypto market is to restore the lost trust, credibility, and stability in the global money system. The market prices of several digital assets are proof that the market has welcomed a crypto winter. As anticipated, investors in the crypto space are wondering how long it will last. Going by previous markets, it could be that the situation is in for a long haul. Mostly, the crypto market is awash with negative sentiment, which has greatly affected investors. Since Cardano is the worst hit asset, ADA holders are careful about any speculation that could further disappoint them. But Michael Saylor seems to have something interesting to say. Saylor has taken to Twitter to enlighten crypto investors who are in the process of surviving another bear market. He urged his followers to stay humble and stack sats, which implies that they should keep increasing their gains calmly without worrying or panicking about the market structure. Saylor is known as a good example for his followers, and he also takes his advice to good use. His company continues to expand its Bitcoin stack despite current issues in the whole industry. In addition, Michael Saylor, who does not appear to be concerned about repeatedly purchasing Bitcoin at its peak, is holding it at a significant $1.2 billion loss. The Rich Dad Poor Dad author Robert Kiyosaki also seems to be in favor of this strategy. He shared his new Bitcoin price prediction and the buy the dip plans with his Twitter followers. Kiyosaki began his post with a Rich Dad lesson, stating that losers quit when they lose, while winners learn from their mistakes. He proceeded by saying that he is waiting for Bitcoin to test $1,100, and that should the king crypto recover after that, he will buy more of it. It is worth noting that earlier this year, after the Fed launched a historic interest rate hike, Robert Kiyosaki tweeted that he thought the bottom of Bitcoin may be around the $17,000 mark. Around the same time, he attested to the fact that Bitcoin may even go below $9,000, but he remained bullish as he added that the Fed and Treasury are corrupt organizations. Two top experts in the crypto world have supported the system of approach for the market downturn. Will Cardano investors buy this idea? Well, amid the bear market, an enormous Ethereum buying volume was seen on Binance and another controlled exchange for the Ethereum USD pair, signifying that a major investor, or anonymous whale, was eager to buy as much Ethereum as they could, for the prices of $1,228. According to the chart, the asset's price has not been affected by that, suggesting that the massive buying is being overwhelmed by the massive selling or shorting. Such a massive inflow of funds is proof that there will still be some investors out there who will purchase the digital asset at a significant discount. Unfortunately, the large buying power and the absence of upward volatility in the market may result in problems for Ethereum investors in the future due to an imbalance between buying and selling orders. Also, Michael Saylor is out there advertising Cardano investors to keep stacking the ADA coin regardless of the price, but he also believes that Cardano ADA is a security. It seems like Cardano investors will have problem trusting this billionaire's suggestion. In a new interview with Altcoin Daily, Saylor stated that there is a distinction between Cardano and the proof-of-work blockchain Bitcoin. He thinks that Bitcoin is a digital commodity and that all the proof-of-stake networks are securities and they are very risky. According to him, the regulators will decide whether or not they will allow them to continue or vice versa. He further explained why he thinks proof-of-stake projects like Cardano ADA are securities and not digital commodities. The token is a liability if it is not a commodity, and so fundamentally, this all comes down to an issue of can you establish your network as a commodity network. To be a commodity network, there has to be no issuer, no initial coin offering, no central organization, and if you study the history of Cardano, it is pretty obvious it's a security. It checks all the boxes, so I don't know how you actually get around intellectually to convincing yourself that it's anything other than a security. Michael Saylor warned unregistered securities to come with potential legal consequences, despite the token's technological offerings. Technology won't save you though. Ultimately, if you're selling a security to the general public without a disclosure statement, The fact that it is technically advanced won't save you from the securities liability, so I would say technology is not an issue. The question is going to be, how will the security regulators deal with the crypto networks that are based on security tokens? I don't know. It's not my business. I'm not in the business, and I'll leave it to other people. According to reports, Michael Saylor is in full support of Bitcoin. It has been revealed that Saylor is telling investors that buying Bitcoin is better than putting their money into traditional assets like stocks, bonds, and golds. I understand the frustration, but if those who support sound money lose 98% of their wealth over 5 years because they chose gold over Bitcoin, it doesn't help the cause. You can't win the war for sound money by impoverishing yourself and your teammates, he tweeted. Furthermore, when it comes to defending Bitcoin, Galaxy Digital founder Mike Novogratz is on par with the likes of Michael Saylor and other Bitcoin bulls. However, he did not hold back his curiosity about the increasingly popular altcoin, which is ADA. Last question before I go shower. Can anyone make a real bull case for ADA? Does anyone build on it? Use it? Why is its market cap so high? Should it be a funding asset? He once tweeted. In addition to seeking information, Mike agreed that ADA was one of the few cryptos he had traded in his life. Soon enough, the tweet reached Charles Hoskinson, who was happy to have a call with Novogratz. Discussing the state of Cardano, Hoskinson stated that he expects it to overtake Ethereum. According to the CEO, Ethereum is riskier from an engineering and research viewpoint, which is why Ethereum 2.0 has been difficult to roll out. According to Michael Saylor, other cryptocurrencies, such as Ethereum and Cardano, are at risk of being classified as securities. This could have a negative effect on their respective ecosystems as users, developers, and projects would need to comply with stricter regulations, but it appears like Cardano ADA stands the chance of being exempted. With over 300 comments made in May, Cardano has demonstrated the most development activity in the sector, surpassing projects like Kusama and Polkadot. Ethereum and Solana, both of which have received over 270 comments, are other significant projects near the top. After dropping the smart contract update, the network has consistently been one of the most actively developed projects in the whole industry. One of the most recent updates is the upgrade of the stake pool operators on Cardano Node 1.35. This update makes Node version a candidate for the final mainnet for the Vassal hard fork release. With the launch of the Node network, all the updates and fixes will have a soft and stable launch for the hard fork. But Saylor's strategy is for all crypto investors in the bear market. The strategy does not obviously revolve around his love for Bitcoin or his preconceived notions about Cardano. It is profound in general. More so, Charles Hoskinson had earlier warned Cardano investors not to be so hyper-focused on the price. He is always wary of establishing a value for Cardano, is adamant that working to drive the price up is not his priority. It is an undeniable truth that cryptocurrencies have always been a money grab for many investors. These investors who see large sum of monies being made overnight and desire to replicate it in other assets like Cardano. This is why situations such as a bear market or a crash crack them up. Saylor has established his claim, stay humble and keep buying. The bright side is that there is more potential in Cardano than just its price. But as always, let us have your thoughts about Michael Saylor's strategy in the comment section below. And make sure you click on the subscribe and bell buttons.